Hi everyone, welcome back to the channel in a new video. Today I'm going to be talking about a little strategy that I always use when I'm trading crypto, and that is going to be the referencing for the CME futures gap fills. Now, you might be wondering what this is exactly, so let's go over in the video and I'm going to show you what I am talking about before we dive right in. As always, make sure to subscribe, hit the thumbs up, and if you want to learn more about all my strategies, you can check out my course page or get some nice discounts on the links in the description to help support the channel. So, when it comes to Bitcoin and crypto in general, we know this is a 24/7 market that never closes. So, if we go into a Bitcoin chart, you can see that every week is comprised of 7 days. Here in this case, this little lighter shaded areas are Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. So you can see in Bitcoin, there is never any gaps on the chart at all. By gaps, I mean that the close of a candle does not match the opening price of the candle right afterwards. If you look at a regular crypto chart, every candle close matches the next candle's open, etc., all one after the other, okay? And in this case, I'm using a little dark color scheme. I don't really use this a lot in my own trading, but I think it's nice for YouTube just to have some dark theme candles as well. But you can see here, bullish candles are white, bearish candles are dark gray. So as you can see, with a regular Bitcoin chart, there's obviously never any gaps because this market never closes. Now, as you know, the CME, the Chicago Mercantile Exchange in the US, has started offering Bitcoin and Ethereum futures, but this goes by their regular Monday to Friday trading schedule. So there is a period on the weekend where there's no trading on the CME, but the regular Bitcoin market is going to keep trading, or Ethereum as well. And so between the close on Friday night and the open on Sunday night for futures at 6 p.m. Eastern time, there is that 48-hour gap that we have, okay? And so that's what people refer to as the CME gap. If I zoom out here, you can see that every one of these lighter shaded areas, and by the way, this indicator that I'm using is called Monday Highlight. I wrote this indicator and it's available for free on TradingView. You can just go look at it, and you can look it through my username, PA Vault Trader, and you can find that there. I like to use it just to highlight the opens of each week, but you can see how on every Monday or Sunday night open in the CME futures, there is usually going to be a gap. Okay, so I'm going to just go ahead and mark off every gap that we have in the past 5 weeks, just like I marked this one, and then we'll go into the general strategy of how we can use this for our own trading. Okay, so I marked off several weeks of gaps. Now, some weeks there's no gaps because maybe price just traded directly through where the market closed that Friday. But for example, here, if we go back here, this is on the open on February 25th. And you can see right here how we have this gap that's going from the top of this closing candle on Friday afternoon to the open on Sunday night. So the strategy for these gaps is pretty simple, and it's just that you're going to be targeting a close of this gap. Now, depending when it closes, you know, it can either be like this case where you close and then you continue in a directional movement in the opposite direction, or sometimes you can close it and then just continue to the other side. So the directional move, that's not what we're trying to predict. All we're trying to do is use this as a target for filling in eventually when the market opens back up. Okay, and you can reference both the CME and a regular Bitcoin chart just to look for price action patterns, etc. But you have a very clear target of where you want price to go in order to close that gap. If you see, for example, on this close right over here, we didn't really have, there was a very small gap from here up into here that was pretty much closed right on the second hourly candle. So when they're very small, they tend to just get filled out almost instantly. This one, you can see we just had a close here, and then the market gapped up and immediately just closed back down again. So these little gaps like this are not really going to provide as much directional move momentum like this one as well. But then there's times like this one. You can see this happened on February 22nd. And of course, these gaps, when we have a big trending weekend, that's when we're going to get these larger gaps like we see here. We closed on Friday right over here. We opened on Sunday night here on the CME, and market just kept pushing up. So we reference this point right here. You can see it was resistance broken to the upside. So we have this as a very important point to reference in the future for markets to come close. You can see that the week after we came and we almost closed it completely from pretty much the top of the last candle that we had, and eventually it closed 1, 2, 3 weeks later. We had this big gap down and we completely closed this gap right over here. This one here was a very nice example as well. This is from April 7th open, Sunday night, and you can see this gap right here. We closed, this was the high of the last closing candle Friday. We gapped up and opened Sunday night over here. Market kept pushing up. So now immediately we know that when market pushes down, this is going to be a big area that we're looking to get filled in. We did come and get some support here, but then eventually we did come, filled the whole thing entirely, and then the market reversed over here. Okay, and that's one thing. Usually when these gaps are filled, then that's when the market has, I found a little bit more chances to just push back up in the other direction. You can see right over here as well. We had the close on Friday, the low of the candle. Sunday night we opened right over here. We had a very impulsive move right on the open on Sunday night. Remember, when the CME futures opens at 6 p.m., Bitcoin, the weekly candle for Bitcoin is 2 hours away from closing. So there is that 2 hour period as well between the CME futures open and the official crypto candle closing for the week as well. And then you can see right here, we retrace and we come back right into this gap fill over here. We get resistance, and then we just continue the prevailing trend of the market to the downside. Okay, then you can see over here, this is the last week that we're currently right over here at the moment. This is a very little gap that we left on the close from last week. Same thing, the top of the last candle into the open of the next one on Sunday. We partially filled it here, and then we pushed back up, and then on Wednesday we came and we completely filled this area. So when we see this market here, you know, we start doing analysis. You can see that it looks like there's a very clear trend line here that's forming, that's broken to the downside. So immediately my first target for this trade would be the closing of the CME gap that we have right over here as a reference. Not only if I'm trading futures, but also if you're trading just regular crypto as well, you can use this as a reference, because that's obviously there's a lot of money in futures that are going to be looking to position themselves and to target specific levels based on the futures charts. Okay, that's pretty much it for the video. Hope you're having a great week, and I will see you all in the next one. Don't forget to subscribe, like, share all those videos to help the channel grow, and I'll see you all in the next one.